Here are 3 news items from the crypto industry. Genesis starts distributing about $4 billion to creditors. Expert declares OpenAI's business model unviable. BTC ETFs record largest outflow of funds. First news. Genesis starts distributing about $4 billion to creditors. The collapsed crypto lender Genesis has completed its restructuring process and is beginning to distribute digital assets and cash worth about $4 billion among its creditors. In a press release, Genesis stated it does not seek to limit compensation based on the asset value at the time of the bankruptcy filing. According to company representatives, clients will receive an average of 64% of reimbursements in kind as part of the initial distribution. The final amount depends on the specific asset. For Bitcoin, creditors will receive 51.28% compensation in kind. Clients expecting Ethereum can anticipate a return of 65.87% of their assets. For altcoins, excluding Solana, the company plans to return 87.65% of funds. At the same time, users with stablecoins in US dollars will receive 100% compensation. For Solana, holders can expect a return of 29.58% of coins, Genesis highlighted. According to available information, the company has already sent clients instructions explaining the mechanism for distributing digital assets and US dollars. Genesis also reminded that, as part of the restructuring plan, management formed a special fund to finance legal proceedings against third parties. Its volume is $70 million. The litigation fund will consist of $26 million in Bitcoin, $13 million in Ethereum, and $31 million in fiat. The advisor to the Litigation Oversight Committee has not yet been selected but will be elected soon, the press release stated. Following the collapse of the FTX exchange, Genesis filed for bankruptcy. The suspension of payments directly affected Gemini, one of the platform's largest creditors. Second news. Expert declares OpenAI's business model unviable. Tech columnist Edward Zitron stated that the business model used by AI startup OpenAI is unsustainable. According to the expert, the developer of the ChatGPT chatbot may face serious financial difficulties in the next 2 years. Zitron published an article criticizing the company's management approach to business processes. He also admitted his skepticism towards OpenAI's products. The columnist questioned the AI startup's ability to stay afloat in the medium term. He said the project spends excessive amounts of money but lacks a clear plan for profitability. Generative AI is a product with no mass market utility, at least not on the scale of truly revolutionary movements like original cloud computing in the smartphone boom and its creation and launch come at astronomical costs, Zitron emphasized. The expert argues that once the flow of investments and loans dries up for any reason, the startup will be on the brink of bankruptcy. To avoid this scenario, OpenAI must make several changes to its operations, he stressed. This includes clarifying the confusing relationship with Microsoft, which is both a major investor and a key competitor of the startup. Intensifying efforts to raise additional funds in significant amounts. Finding a way to drastically cut ChatGPT's expenses. Achieving a technical breakthrough that entails new use cases for OpenAI products beyond the chatbot. In the end, I consider OpenAI in its current form to be unsustainable. There's no path to profitability, the burn rate is too high, and generative AI as a technology requires too much energy for the ecosystem to support it, Zitron stated. Some users on the social network X criticized the columnist's material. In their opinion, his recommendations are too generalized and lack specificity. It is worth noting that experts Amir Efrati and Aaron Holmes previously warned about potential financial problems for AI startup OpenAI. They published an article in the scientific journal The Information, discussing the company's potential losses of $5 billion by the end of 2024. They also believe that at current spending levels, the startup will run out of money within 12 months. Third news. BTC ETFs record largest outflow of funds. On Friday, August 2, 12 Bitcoin exchange-traded funds, ETFs, in the U.S. recorded the largest single-day outflow of funds since May 1, over 90 days ago, and more than 60 trading days. According to SoSoValue, the total daily outflow of funds on August 2 amounted to $237.45 million, the highest figure since May 1, when outflows totaled $563.77 million, and the fourth largest daily outflow since the launch of spot Bitcoin ETFs in January. Recently, Grayscale launched the Bitcoin Mini Trust, one of two ETFs registering inflows, receiving a modest $9.88 million in additional funds. IBIT from BlackRock, another ETF with positive dynamics, saw inflows of nearly $43 million. However, these inflows were offset by outflows of more than $100 million from FBTC Fidelity, approximately $81 million from ARK Invest in ARKB21 shares, and outflows of less than $50 million from GBTC Grayscale, BITB Bitwise, and HODL Van Eck. The remaining 5 funds recorded no changes. While the single-day outflow was significant, the overall trading volume barely exceeded normal levels, and the total net asset value of all ETFs combined remains near historical highs, even as Bitcoin's price continues to decline towards the $60,000 mark. According to SoSoValue, while the 9 spot Ethereum ETFs currently on the U.S. market recorded outflows of $54 million on Friday, this amount is actually the smallest single-day outflow recorded for these funds during their short time on the market. However, the total net assets held in the funds are currently at an all-time low of $8.33 billion, significantly below the $10.24 billion peak reached on the first trading day. Most of the outflow, $61 million, came from ETHE Grayscale, which also boasts the highest net asset value among spot Ethereum ETFs at $6 billion. The total trading volume of Ethereum ETFs was also the second largest ever, amounting to $438 million, significantly less than the Bitcoin ETF trading volume of $2.34 billion.